So thank you everyone for attending this session on blockchain and the Islamic economy. First, let me introduce myself and the panel. My name is Aziz and I'm the founder of Master the Crypto. Here we have the co-founder and CEO of Hello Gold, Robin, and also Devi, the founder of Burnmark. And we also have, Matthew, the CEO of Blossom Finance, and Haris Irfan, the chairman of the UK Islamic FinTech Council, right? So in this session, we are going to talk about how can blockchain power the Islamic economy, right? So as we know, the global Islamic economy is a $2 trillion market, which traditionally is fuel driven by Islamic finance, but it's now starting to encompass more diverse industries such as halal food, tourism, fashion, and etc., right? So let's dive straight into blockchain. As we know, we've heard of the revolutionary nature of blockchain, right? So blockchain is essentially a decentralized ledger where all your transactions are stored chronologically and everything is transparent and immutable and secure, right? And you know, there's been a lot of talk about the revolutionary nature of blockchain, and what we're going to discuss today is whether blockchain technology can synergize with Islamic economy and the effects. All right. So without further ado, let me dive into the first question to Ms. Devi. Right. So blockchain technology is touted as a revolutionary technology with the ability to disrupt a lot of industries. Right. So what do you think are the features that make blockchain technology so revolutionary, and how does the Islamic economy benefit potentially from blockchain?
Sure, thank you. Just to quickly introduce my point of view, I am Devi. I'm based in London. I run a fintech research company, which means I look at all of the segments within fintech in a very neutral way, or I try to. And Islamic fintech has come up as a very, very huge market of interest for us. So we've been doing a lot of research on the space in the recent past few months. So I'm going to respond from that global point of view where we have looked at data and where we have looked at use cases and seen things happening. Now, the first thing I would say is blockchain is different from cryptocurrency, and I'll come more to that later on, but it's very important to understand that blockchain is the underlying technology for all cryptocurrency. And as a fintech research firm, we look at technologies like blockchain, but not so much at cryptocurrencies. Now, to answer your question, blockchain is a huge market at the moment. So we're looking at a market size about $200 million at the moment at the end of 2017 as the market size of blockchain companies around the world. Now, that number is going to be predicted to reach $60 billion by 2024. So we are looking at that massive amount of growth into $60 billion in the next few years, which means that the amount of investment going into the startups in that space is going to be huge as well. So last year we had $1 billion, close to that, going into fintech startups focusing on blockchain, and that number is going to increase massively this year. With that in mind, blockchain is a huge, huge part of the financial services industry. So blockchain, of course, has so many different applications and use cases around the world, but 60% of all investment in blockchain today is going into financial services, and specifically fintech. So it is one of the largest markets for blockchain in terms of financial services. Now, what makes blockchain very interesting to Islamic finance or Islamic fintech? The first part is, of course, the cost. Now, Islamic financial services traditionally, again, I'm talking as an outsider, so forgive me if I get anything wrong, but we've always heard from Islamic finance companies that the cost of processing Islamic finance products is higher than regular financial services products. So blockchain is a very, very effective tool as a decentralized ledger to bring down costs in the back-end processing systems of an Islamic finance company. Now, the second biggest use case here is that of contracts. Now, smart contracts or automated contracts in blockchain is a really, really good way to ensure that any products or any services are Sharia compliant, which means that any kind of terms and conditions you want to include in a contract, either with a customer or with a third party, can be integrated beautifully into the blockchain. Now, the third big use case is around fraud and risk. Blockchain makes sure that you are able to track every single element of your service with an Islamic financial service company, so you can actually ensure that the fraud is reduced and the risk to both the customer and the bank or the services company is reduced. So these are some of the use cases that are really useful to Islamic fintech companies and financial services companies from a blockchain point of view. But we'll talk more about that hopefully in the rest of the panel.
Thank you for your perspective, Ms. Devi. All right, you brought up a very interesting point, smart contracts. But before we delve into that, I just want to give you guys a fun fact, right? Today is the 31st of October, right? Which means that today is the 10th year anniversary from the creation of Bitcoin, right? Bitcoin's white paper, as you know, was published on this day last 10 years, and it created an entire industry. Where, as you can see, thousands of coins today. So it's a pretty good date for us to even have this discussion in the first place. But touching on your points of smart contracts, right? So in this panel we have Matthew, right, who's well versed in smart contracts. So contracts are defined as pre-programmed contracts, right, which are self-executing, automated, right? So how do you think this smart contracts can be applied to Islamic finance, because we know Islamic finance can be higher cost, right, for as compared to traditional banking. So how do you see smart contracts as being an enabler to leveling the playing ground?
Sure. Bismillah, alhamdulillah, salatu wassalam ala Nabi Muhammad sallallahu alaihi wasallam. Assalamu alaikum, everyone. I completely agree with the statement you made about the efficiency, lowering the cost related to financial technology and the financial services industry. Simply put, the way to look at smart contracts, I think, is as a program, like any computer program. They just run on blockchain. Blockchain is really just a computer with some special properties. Any information you put, as you mentioned, it's immutable, meaning it can't be changed. It's a computer that's available anywhere you have internet, anywhere in the world where there's internet. And it's a computer that never turns off. Plus, it's the world's only computer that can transfer value between parties that do not trust each other. This is really the revolution of blockchain and cryptocurrency. So a smart contract is just a computer program that runs in that special computer. Now, there's a cost associated with that. It's not free. You have to pay the person running the computer. What we're doing with smart contracts is we're using this in the sukuk space. So the traditional sukuk space, as many of you know, there's many parties involved that take a fee. Setting aside the lawyer and the structuring and the consultants, they're the most expensive ticket item. In the sukuk space, you have calculating agent, paying agent, transfer agent, assignee, custodian, many parties involved, some taking $100,000 per year. It can easily add up to $1 million, $2 million per year. Using a smart contract, all of those parties can be removed from the equation. The smart contract can register the subscription. It can track who owns the coupon. It can facilitate the trading of that coupon on secondary markets. It can facilitate over-the-counter trading of the coupon. And most interestingly, it can facilitate the payment from the issuer back to the coupon holders automatically, based on whatever rules. You want to have a single sukuk al-mudaraba, which is what we're doing. Simple. Based on the ratio of the capital invested, they'll receive their coupon payment. But you can also have a multi-tranche, multi-tiered sukuk. The sky's the limit, really. So this smart contract, the way to view it is really a program that runs in this special computer called blockchain. And markets or systems where you have many parties, especially globally distributed, that may not know each other, that may not trust each other, that may be cross-border, this can add a lot of efficiency and transparency. And also for a regulatory perspective, there's traceability and auditability built in, which is very, very powerful. So it's not a silver bullet, but in certain applications, it can be very, very powerful.
Thanks for that, Matthew. So we've heard that smart contracts can really make the operations and processes very efficient, right? So let's talk about the general Islamic economy in terms of adopting blockchain technology, right? So, Mr. Harris, right? What do you think? Why do you think the Islamic economy or Islamic finance is relatively slow in embracing cryptocurrencies? And if so, can you reveal some barriers as to why this is happening?
Yeah, thank you, Aziz. It's very interesting about the relationship between technology and Islam. It was a very different relationship, say, several centuries ago versus what it has been in the last 2 centuries. So when you look at the golden age of Islam, we've seen amazing achievements culturally, scientifically, in astronomy and mathematics, and so on, and medicine as well. But when you look at, for example, the 19th century onwards, I'll give you one story. The Ottoman governor of Egypt, Mehmet Ali Pasha, imported water faucets, taps, into the main mosque in Cairo. And the scholars debated whether it was acceptable from the point of Sharia to use these faucets to perform wudu, the ablution, before the prayer. They debated this as if it was something to be debated. And eventually the only group of scholars who decided it was acceptable, permissible from a religious perspective, to use it for wudu were from the Hanafi group of scholars, and hence why even today in the Arab world, taps, water faucets are known as Hanafiya in many parts of the Arab world. Now, this is not an isolated example. We've had similar discussions about the sighting of a telegraph pole from mosques, the use of loudspeakers, the use of aeroplanes. Television was banned by South African ulama in the 1980s, irrespective of the content of whatever was on TV. Does this make any sense to me? It doesn't make sense to me. I hope it doesn't make sense to most people here. But these are genuinely, this is part of human progress. And it was being restricted by a certain type of scholar. And it's a certain type of scholar in recent years, not from our golden age. Now, I think cryptocurrencies falls within that because behind currency, there is a hikmah. Currency money must be a medium of exchange, not a commodity to be traded. That's what it's become in the modern financial system. Financialization of the global economy means that we trade money with each other. We buy and sell bonds, other people's debts, which, as we know, is not acceptable in Sharia. So some types of cryptocurrency are offering an alternative. They are saying a medium of exchange which is decentralized and finite and scarce and divisible and has a high stock-to-flow ratio like gold is a good form of currency. It's a sound monetary system. It has all the features which are Sharia compliant based on what we know from Quran and Sunnah. And yet, our scholars today, or some of them at least, particularly the ones who are famous on social media and so on, and they're in particularly prominent positions, are saying, and I'm quoting from one of them, I don't need to know any of the technicalities. We don't need to understand the technical issues here. You don't need to know about the economy. It's haram. It's haram to buy it, sell it, exchange it, use it to sell goods and purchase goods. I mean, there's no thinking behind that. There's no hikmah behind it. So I think we're doing ourselves a disservice. We've created barriers, and we've allowed other people to dogmatically dictate their terms and say, no, you can't use this technology because I don't understand it. And instead what they should be doing is taking the time to understand the hikmah behind it. And does it conform with what our understanding of the nature of money is in Sharia? Because if they did, they would find that some types of cryptocurrency, and I use Bitcoin as an example because I think it's gold 2.0, it's scarce, it's decentralized, it's divisible, it has a high stock-to-flow ratio, it has so many aspects and more than gold that make it an exceptionally good type of currency to be used as a medium of exchange. Sure, there are teething problems. We're like at the stage of the internet in the 1990s, and they will be ironed out. But I think there's a future for cryptocurrency within the Islamic economy. And I want those scholars to come forward and sit on technical panels and understand the technicalities of the global monetary system, of global finance, of global economics. Understand it clearly from everybody's perspective, each stakeholder in the economy, and then give their ruling. But that hasn't happened to date, only amongst a small group of scholars.
Thank you, Aris. Yeah, and I totally agree with you because there's very little scholars that gave out their opinions on cryptocurrencies, particularly because it's very, very technical to understand. It's very hard to get your head around it, right? So we can, in the foreseeable future, in the short term, I think we're going to see very little opinions on scholars. But down the line, inshallah, we can see more discussions on that, right? So, and we also have Mr. Robin, who's also the co-founder and CEO of Hello Gold, which tokenizes gold assets, right? Tokenizes gold in tokens, cryptocurrencies, right? So my question to you is this, right? The premise behind cryptocurrencies is, one of the main premises behind cryptocurrencies is financial inclusion, right? So do you think that cryptocurrencies are a good enabler for that vision?
So I'm not a cryptocurrency evangelist. I like the technology. I think technology has huge potential to fundamentally change the way we think about finance. Whether that ultimately ends up with a cryptocurrency or not, I'm more passionate about the technology. And that's why for us in Halal Gold, when we thought about how we're going to basically execute on our mission, using blockchain technology and tokenization was absolutely key, front and center in everything that we did. And the reason for that is very simple. From a financial inclusion standpoint, and just to put that in perspective, that about 2 billion Muslims around the world, nearly a quarter of the world, but more than 70% of the unbanked population in the world are Muslims. That's a disproportionate number of underserved and unbanked in the Muslim community, and therefore financial inclusion projects need to be Sharia compliant to ensure that we lift this huge chunk of society out of the situation they're in. And tokenization, I believe, plays a key part, because by enabling people to fractionalize their products to a level where the customer that we're serving has a choice as to whether they want to use your product or not, as opposed to what currently exists today, where basically their ability to buy or use a banking product is a function of how much money they have in the wallet, is a huge challenge. And by fractionalizing it down, in the case of Halal Gold, to 25 cents, so long as you have 25 cents and some kind of phone, you can buy a product. You have choice. And giving people choice, I think, is a key part to financial inclusion. So whether it's cryptocurrency and whether that's the end state, I don't know. I have a sense. But I think the technology in itself is absolutely key to Islamic finance and to the ultimate purpose, which is to ensure this financial inclusion for everyone.
Thank you. Yes, do you have any perspective on that?
Yeah, I agree with everything Robin said, and I would add that, taking Sukuk as an example as well, there's been a desire to increase retail investment into Sukuk. It's been very difficult to do that in a lot of cases because the lot sizes are so high. In Malaysia, for example, the minimum lot size for a typical corporate Sukuk is 5 million ringgit. It's like 1.25 million US dollars. And typically, all the biggest institutional investors buy all the good Sukuk, and they never sell it. So it's not really liquid. There's nothing left for retail. And I agree with Robin's point about tokenization. For our Sukuk, for example, it doesn't cost us any additional incremental cost to issue 1 rupiah, less than a US cent worth of Sukuk. To sell 1 cent worth of Sukuk, it's the same as if we sell $1 million worth of Sukuk. The cost is the same transactionally for us. So I agree that the tokenization of many asset classes, gold, silver, even equities, Sukuk, I think the tokenization can play if the financial institutions and banks do the job well. It can play a great role in financial inclusion, but it won't happen automatically. There needs to be a commitment towards financial inclusion and towards offering products in new segments that are down market from traditional business, that need new types of business models, right? And efficient business models will be a key to that.
Thank you, Matthew. So that's interesting because the next question, we're going to talk about the traction of the industry, right? As we know, many people are jumping into the cryptocurrency market, investing into thousands of available coins that they can find in exchanges. And a lot of businesses are exploring blockchain technology in terms of how they can streamline their businesses and process to make them more efficient. So my question to Ms. Devi is that, how do you think that the evolution of blockchain technologies and cryptocurrencies will pan out in the Islamic economy?
Absolutely, and this is what I mentioned at first, that blockchain and cryptocurrency are 2 completely different industry segments, and we need to treat it as such. And I completely agree with Rob, what you said as well, in that I'm more excited by the technology, the blockchain technology that has huge amounts of capabilities to do to offer transparency and offer fraud management systems and offer personal consent practices into Islamic banking. But cryptocurrency is also evolving as a huge segment, so we need to understand what's happening there as well. Now, in Islamic finance, one of the conditions, as I understand it, is that you need to have some kind of asset value, real asset, backed in any kind of currency. So that's why I'm interested in firms like Hello Gold or 1 Gram based in Dubai, who actually help tokenize and use gold as a means of holding some asset. So 1 Gram, for example, says that they will keep 1 gram of gold for every unit of cryptocurrency that they offer in the market. So it is very, very Islamically compliant, and that is one kind of market or business model we are seeing emerging on the Islamic financial services side. But looking at cryptocurrency on the whole, Bitcoin is a highly volatile currency, and of course the volatility this month is less than usual, but still a highly volatile currency, and Bitcoin is now 10 years old. So we see a lot of other coins emerging right now, and a lot of Islamic fintech companies are using Ethereum, for example, and Ripple has its own currency that's offering solutions to banks and B2B in a B2B play. So there are lots of firms who are competing with Bitcoin in terms of the currency, but personally I'm excited by the asset-backed currency models, which is followed by 1 Gram, Hello Gold, etc. And also in terms of crypto exchanges coming up worldwide, in almost every country in the world, that offer markets on their own for people to use the currency and trade it better. But absolutely, I would keep blockchain as a completely separate entity. And if I were an investor, I would invest in blockchain today, because looking at the market size available to it, looking at the capabilities of the technology, and looking at what banks are doing with blockchain, it's really, really interesting. For example, the Emirates Islamic Bank is using blockchain today on its checkbooks. So every checkbook has its own identifier tag, and this goes on the blockchain, so that every time a check is used, the fraud detection happens on a real-time basis, and it's much more complete and accurate as a risk management mechanism. So what banks are doing with blockchain in the UAE and in the Middle East is quite exciting as well. So definitely blockchain and technology side of the currency more exciting, but cryptocurrency will evolve as we speak as well.
I actually want to take a counter position on two things you said. So number one, on blockchain, blockchain without cryptocurrency is a bit like a car with no combustion engine, no internal combustion engine. So the cryptocurrency is important as the fuel to incentivize people to run the computer. So that's the first thing. The second thing is, you mentioned a fiqh point, which I want to just clarify. There's no condition in Islam, the fiqh of money, there's no condition that it must be tangible money, physical money. That's and correct. This is the majority opinion of all four madhab. Yep. The condition is that it must qualify as mal, as property. And the 3 out of the 4 madhab agreed that any intangible thing can be money if it's treated as such, if people accept it as such. It was the Hanbali, I believe, who disagreed, that said only tangible things, not usufruct things. For the classical example is, if I offer you a ride on my camel, do you own that ride on my camel? Can you transfer that to your friend? Can you say, no, I want to gift the ride on the camel to my friend? The madhab, the scholar said, yes, you can. That is property, that is mal. And the Hanbali in modern days, the modern Hanbali scholars agree that due to customary usage, non-tangible things have the value as mal. For example, intellectual property, trademarks, copyrights, all of these things that are recognized by the fuqaha as mal. Yeah. So about so don't get me wrong, I think gold is fantastic, and I think asset-backed tokens are a fantastic idea. I'm not encouraging anyone to buy cryptocurrency or saying everyone should use it as money, but I just want to clarify the point about the Islamic conditions for money. Allahu alam, but I believe it fulfills all the conditions.
And Matthew, many of the scholars, many prominent scholars who have made cryptocurrency impermissible have ignored that very point. So that's the hikmah.
Actually, just using Halal as an example, we have the Gold X token, which is the one that's asset-backed. buy gold, and that our Sharia advisors, our Omani advisors, Malaysian sort of Dubai firm. So when we went to market with GoldX, I think about a year and a half ago, that was, I think, the first one to get its fatwa. And we spent a lot of time structuring with Omani the Halal token, which effectively is a security token. It's not backed by anything. And they've also issued a fatwa on that, I think, about 2-3 months ago now. And the reason why I say this is that, to Matthew's point, is not that it has to be asset-backed. It's actually what you want to do with it, the objectives of the token, that then determines whether this thing can be Sharia compliant or not. So, it's up to the token issuers and Sharia advisors to opine on these things and to come with the right structures, but certainly not being asset-backed doesn't necessarily make it not Sharia compliant. Yeah. Having said that, it just makes it probably speculative.
Excellent. All right, thanks.
And sorry, just
yes.
one other point about fluctuation. You're absolutely right. The problem with using, if we were to all adopt cryptocurrency as money, today cryptocurrencies are very volatile, and Islam is concerned with the preservation of wealth as one of the key goals. So whatever we use, whether it's asset-backed, whether it's intangible, it needs to preserve wealth, and whatever can do it, I'm open to anything that will do the best job at preserving wealth. I think we should embrace it.
All right, so last few questions, right? So to Harris, so when we talk about cryptocurrencies in the Islamic world, there's always a parallel towards gold, and as we have discussed. So what do you think is the similar characteristics of gold and Bitcoin on a deeper level, and do you think that one is better than the other?
Yeah, let's look at the history of money. Let's think about the Roman emperors and their use of the gold as a form of currency. During the Caesar's time, it was a sound monetary system because it was stable, it preserved wealth, and everybody knew what they were buying with a gold coin, and it was standardized. As successive Roman emperors started clipping a gram from an 8-gram coin of gold, the money started getting devalued, and that was a form of stealth taxation. And from that moment onwards, the Roman Empire was in decline. And I believe there's a direct correlation between devaluation of a currency and the strength of a society. And you start to increase the gap between rich and poor. The devaluation causes all sorts of ripple effects in society, and that empire will then eventually fall. And we've seen that on a number of occasions whenever a powerful society starts to devalue its currency. Gold has always been chemically stable, robust. The amount of gold in the world stays fairly constant. In other words, it has a high stock-to-flow ratio. You only produce about 1.5% per annum. And Bitcoin has many similar characteristics because there are 21 million maximum number of coins which will be mined by, in 20, 30 years' time. We're starting to approach that point very soon, and it grows at a rate which is smaller than the growth that gold is mined. It's decentralized, it's not controlled by a single government, it's not declared by legal tender by a government, it's not fiat. You can't print more of it, just like you can't print more of gold, except by doing effort, by mining it. So it has many of the characteristics. It's scarce, it's divisible, it's finite, it's robust. And that's extremely important for a sound monetary system, because a sound monetary system leads to a society which is peaceful, prosperous, has a reduced gap, reduced inequality gap, and that means fewer wars, less conflict, more peace. These are, and also, interestingly enough, the advancement of scientific and cultural knowledge. If you look at, for example, Rome at the time of the Caesars, or Byzantium at its height, or the second half of the 19th century, when there was a gold standard in place. When you look at periods after that, say from 1914 onwards, or very instructively from 1971 onwards, when, of course, currencies free-floated, there's a significant devaluation in all of the currencies. Even the Swiss franc, which decided to decouple in 1992. And from that moment onwards, you start to create wealth inequalities. And we see it today. We've had one financial crisis, and I am sure, and many others feel confident, that there will be another financial crisis. It might be even greater. So we need to look towards a sound monetary system. Gold is a sound monetary system, but I think there could be something else, a cryptocurrency which is very gold-like, which could be even sounder.
So can I just jump in? Sure. Look, I'm a huge gold advocate. I mean, that's what we do. But I think there is, and I understand the narrative between Bitcoin and gold. And theoretically, I would agree, but there are huge challenges, not just with Bitcoin, but with gold. The first and foremost being government, right? There are very few governments in the world that are prepared to surrender their fiscal policy, which effectively you have to, right? If you were to then replace their fiat with gold or Bitcoin. So I don't see that happening. I can see the path that Bitcoin or gold would have to take to get to that place, which I think is kind of like a nirvana. It means nice to have. I just think that huge political challenges that will get us there. Having said that, I think with gold, there are a few attributes for the next 50 years that sets it apart from Bitcoin. First of all, is that everyone kind of gets it, whether you're rich or you're poor, whether you're a government or an individual, whether you're in Asia, Africa, Middle East, in Latin America. Everyone understands it. It's an inherent part of their culture. When you think about the US, where 50% of Americans don't have a stockbroking account, and you think about the world and their ability to understand how does a Bitcoin work? If you ask the man industry, how does a Bitcoin work? And their ability to understand that, I think there's a huge challenge. There's a huge education involved that will require government to educate. I don't see government wanting to educate because then they won't get the dollarization of the economy, but they're like the Bitcoinization of the economy. So I think there are some fundamental challenges in that narrative. And I think gold has that same problem. I don't see gold ever coming back as a stable currency for economies, except, and I've heard this for Bitcoin, in failed states. If states fail and people lose trust in their currency, then absolutely Bitcoin or gold can be the currency of choice. But that's a really awful place to be in, and I don't think any country wants to get there to see the adoption of these two things. Just one last thing. I mean, there are some issues with Bitcoin. I mean, it is decentralized in theory, is limited in theory, but in reality, there are very different things, right? And if you look at and talk to a number of people, they'll say that Bitcoin and the flow of Bitcoin is controlled by syndicates in China, etc. So it's centralized to, de facto, if not technically. And the second thing is that it's also not finite in theory, because you've had Bitcoin Cash, you've had all these things, these forks that happen from time and time, and therefore it gets spun out. It's as if you started one currency, let's call it the euro, and then suddenly Greece decides to pop out and create the drachma again, and then you create a whole bunch of stuff behind it. So there are issues with the idea. I like the idea theoretically, I just don't see us getting there, at least not in my lifetime.
And I want to add one wrinkle on the gold versus Bitcoin debate. One criticism of Bitcoin and cryptocurrency in general is it's highly speculative. And in fact, some Sharia scholars have said, well, Bitcoin is haram because of speculation. Frankly, that's an external factor. Mm-hmm. Something that people use for a haram purpose does not make a halal thing impermissible.
Correct.
Perfect example is the one who sells grapes. The grape merchant cannot sell grapes to the one who he knows will make wine, right? But grapes are still halal, and you can still sell grapes. The same is true of cryptocurrency. If you're running a cryptocurrency exchange, you should not be selling, and you have a responsibility to make sure that no one is using it for nefarious purposes, like drugs, money laundering, or even worse things that I won't even mention. But about speculation, just in one fiscal quarter, there's about two times more gold is traded on the COMEX in London than has ever been recovered physically from underground. So if you want to talk about speculation, actually, the speculation in the metal markets is orders of magnitude greater than Bitcoin, right? And they're more mature markets, and so they're more stable. So don't get me wrong, I love gold, I love Bitcoin as well. But I see a middle ground where central banks should actually be issuing their own tokens on public blockchains. So they retain control of their monetary policy, but they have transparency in reporting. They also gain the ability to see the flow of currency within their economies in a way that they don't have today. Yeah. And it opens up all sorts of innovation. The fact that people can transfer value between each other without trusting each other, that's one of the real brilliant innovations here. Yeah. And central banks are controlling the money supply. If they issue tokens their own monetary tokens on public blockchains. This is like you instantly can create a regulatory sandbox for developing blockchain and payments and all sorts of fintech. But it's much more clear, and when you change the money supply, it becomes known, and the banking licensing on top of that. I mean, there can be a whole scheme that develops on top of that. So I see some middle of the road approach.
Yeah, I really like that approach as well. I completely agree with you there. Although I'm not a big fan of cryptocurrency myself, as you can tell, but I think as a mass market instrument of financial inclusion and for offering transparency to the market, it still is one of the best tools available to regulators and to the government. So if you are looking to offer your personal consent authority to your own customers and the general public themselves, if you're looking to offer better transparency in terms of the products that you're offering, for example, credit cards. So going by your principle, we already have Islamic credit cards which prevent you from buying alcohol or prevent you from buying things that are not allowed in Islam. And that's happening because of blockchain. So the kind of transparency that's available and offerable to the market because of blockchain and because of cryptocurrency is huge. Now the problem is, like you said, Harris, that most regulators are saying, I want to stay away from this. I don't understand cryptocurrency. I don't like the volatility in the market because of it. I don't understand how blockchain technology works. And that's really unfortunate because the power that you can actually offer to the market, the mass market, is tremendous. And both the UAE and Saudi Arabia have said that we don't want to regulate cryptocurrency, and the UK has licensed one company, Yielders, using blockchain, and Malaysia has, I think, done 6 licenses now. So there are companies taking completely different approaches from each other, and that's the unfortunate part, I think, with blockchain in Islamic finance.
And I think one of the ironies is there's no one I don't want to say no one, there's very few people, I think, that are at work in public policy or in government that understand how TCP/IP works and how HTTP works. But yet, no one's saying, oh, we don't want to use the internet, right? So I think there's a comfort that will come with time, and people will realize you don't need to understand all the detailed protocol level things, but I think over time, I mean, 2 years ago when I was here, when I mentioned blockchain, no one knew what I was talking about. Some people said, oh, isn't that some multi-level marketing scheme? But now it's on the lips of every banker you talk to, right? So I think over time, it will be a natural progression.
Okay, thank you very much, speakers, for your views. So, Alhamdulillah, it was a great discussion talking about blockchain and its role, potential role in the Islamic economy. So now we'll open the floor to a few questions, 1 or 2 questions before we end off. Yes.
So difficult because I can always tell him, hey, stock market, go to drival.com and you can buy 1 or 2 units of stocks. And how do I explain to my son, who is very, tech savvy, but still does not understand what blockchain and what cryptocurrency is and how he can invest in that market?
Does anyone want to take that question?
I can take that. I'll try.
Okay.
I mean, first of all, depending on how old your son is, there is a plethora of stuff that you can get out from social media, YouTube, that will inform him about blockchain, the difference between blockchain and crypto. And actually, today, there is actually many ways in which you can invest in tokens, whether it's Bitcoin or some altcoin. Then it's just a question of his risk appetite and your appetite to fund his losses. But actually, it's quite straightforward. I mean, the more challenging question is that for most of us here who are fortunate enough to have access to great financial products and services, we can participate in this space. But actually, for the less well-off, the less fortunate, and this is my greatest bugbear about the blockchain community, it's actually very incestuous and actually very exclusive. A lot of the products and services that have been created thus far are for the mass affluent, the high net worths, the informed, and they're not really targeting the man that this was originally designed today, Satoshi, to fix, to create a solution for everyone.
Or woman.
Or woman. So
or
man
woman.
in this generic sense. Yeah. But I think that's as an industry, we're trying very hard to get there, but I think thus far we have not delivered.
Just you can also go visit masterthecrypto.com to learn more about cryptocurrencies and tokens, because we simplify stuff a lot.
The problem is, the last 25 years, we have been Islamic finance. Still have to understand that. Are we going to create the same myriad of conversation, discussion, and make cryptocurrency so complex that we will never get to a juncture of conventional finance or conventional, investments?
All right,
That's the issue.
Yeah, sure.
I think it's very simple. Only invest in what you understand.
Yeah.
If you invest in what you don't understand, it's a recipe for disaster. And we saw that recently. There was a huge bubble in cryptocurrency. People buying all sorts of ICOs. There's basically 3 guys and a PowerPoint presentation and a website, and they raised tens of millions of dollars. And this is not Sharia if you're doing this. So invest in the real economic sector. Focus on projects that you understand, that you can conceive. If you don't understand the underlying technology, that may be okay, but invest in projects and something that's doing real economic activity you can understand. That's my recommendation.
All right, so let's move on to the next question. All right, sure.
This question is actually directed at Harris, because you mentioned it a lot about Bitcoin. I think one of the issues I see is such a new coin that the stock of the coin that you mentioned is actually already held by a lot of third parties who are unknown. And there's the urban legend that half of the coins are actually held by 6 people. So that, for me, when you already have such a concentration of wealth in parties unknown, undermines a bit Bitcoin. So I don't know, are you wedded to Bitcoin in particular?
No, it's not Bitcoin specifically that I'm wedded to. It's the concept of a sound monetary system that I'm wedded to. And so far, it's been the one cryptocurrency that seems to stand head and shoulders above everything else. I'm not sure why anybody would think, and I won't name which ones, why some of the other cryptocurrencies are a good idea, because they have aspects that lead me to believe they're not a sound monetary system. They're like soft money. And what's important for me is a monetary system, an economic system that produces a fair and harmonious society. Anything that gets me to that end point is good. Now, I don't know if that's Bitcoin, and I appreciate what you say. It's possible it may be closely held by a small number of people, but so far, and it's been volatile, but it's a very, very early stage. But as we get closer and closer to its eventual full mining, maybe we will start to see it as a medium of exchange and not just a store of value, which is what it is right now.
If I could just add to that, I think one litmus test that Bitcoin can get to that place is when it becomes boring. And the big problem with Bitcoin is that you have this thing that's high return. And I'm pretty old school, right? High return comes with high risk. And you don't want a store of wealth or a method of payment that's high return, high risk. Yeah. So it has to get to a place where it's literally doing what gold does, because that's the one key attribute that's missing, is that it's not low return, low risk.
Yeah.
And when that happens, I would imagine that the 6 or 10 people that hold most of it will get fed up of holding it.
Yeah.
And it will just dissipate.
By the way, its flow is now the same as gold versus its stock. So it's actually converging now, and maybe it'll overtake it. I don't know what the future holds.
Okay, we have time for one final question, all right? So
I think there's one at the back.
All right, sure, yeah.
This is a very general question. For instance, in Islamic finance, when it comes to personal loan, we have this commodity muraba, which obviously has to go through a metal. I was wondering, do we have something, in Islamic fintech which can be an equivalent of this commodity muraba? Particularly, if we can have some payment systems like Alipay or VPay, where consumers can use this platform, to make payments. So, and can we use a Sharia-compliant cryptocurrency for that?
Yeah.
I hope not. So, I think a danger is that with new fintech, we end up replicating the same boring Islamic banking models that just copied conventional finance. We have to be honest with ourselves as an industry. Commodity murabaha was a necessity. I'm from a programming background. It's a hack. That's what we call it in computer science. So commodity murabaha is an Islamic financial hack to create an akad, a contract that looks like it's not a debt, but objectively, if we really ask ourselves, A and B, what is the difference to the consumer versus a debt with the interest versus a commodity murabaha based financial product? Is it objectively different? I haven't found anyone who can tell me an objective difference. So I think there's a very real danger that we take this wonderful new technology that humanity has and we replicate the same boring financial models. However, there's a possibility here. There's an opportunity to use this technology to embrace more, let's call it Sharia performing, not just Sharia compliant, but Sharia performing or Quran-based Islamic financial models using mudaraba and musharaka and even ijara and other things where we can tokenize assets and lease them, where we can do true profit sharing. And these technologies will lower the cost to do that, and I think that's very encouraging. But I think there's a very real danger. We just add efficiency on the old boring system that everyone complains about.
If I can just expand on that, I think is my microphone is back on. I agree with everything you've said. 40 years ago, at the start of the modern era of Islamic finance, commodity murabaha was a form of contract that was given a waiver by the scholars because they knew that it was a proxy for interest-based financing to get us there towards something a little bit purer, a little bit more risk-sharing, which was meant to be the fundamentals of the Islamic financial economy. And what's happened is 40 years later, the Islamic banking industry, especially in the UK where I am from, but I see it elsewhere as well, it's become dominated by conventional bankers and their mindset. So what they aim to do is they aim to reverse engineer conventional, debt-based, interest-bearing financial products. And then the public can't tell the difference. Right? They don't see what the value proposition is that's different. They know that there's some Arabic terms and there's a scholar's fatwa at the end of it, and they kind of understand that, and maybe it looks a little bit more halal. And they buy it because there's no alternative. But the conventional bankers who run those institutions say, well, your scholars have approved this, so I can carry on printing more of this. And they continue using commodity murabaha, not realizing, because their mindset is still stuck in conventional ways, that actually there's a better way of doing this, a more risk-sharing way of doing this, a way that makes society function better. And we haven't got there yet. And that's why I think it's going to happen at the fintech, at the grassroots level. I don't see it happening at the Islamic banking level. When I hear Islamic banks talking about fintech, what they're talking about is enabling technology, not disruptive technology. They're talking about technology that makes their processes cheaper and more efficient. But I don't think that's the end goal here. The end goal of the Islamic economy is transactions throughout the world that bring society together. And at the moment, the banking industry, because it's a financialized system based on this so-called Chicago School of Economics, is one that encourages financialization of the economy. And that's why you see commodity murabaha out the way. I think we need to stop talking about commodity murabaha. We have to start talking about mudaraba, musharaka, wakala, and so on.
Exactly.
Yeah, can I just give an example? Yeah. I mean, I think one of the most malign things about this space, cryptocurrencies, altcoins, is the ICO and the scams and all that kind of stuff. But within the guts of that, you have ultimately what could be a risk-sharing industry, whereby, for example, and this we talked about earlier, imagine this, right? You have a whole bunch of people that have no access to the financial markets because they're way too small, they're not connected, but they want to create their own little one-man grab, or they want to expand their shop from one shop to another shop. You can create, through contracts, the ability to have your own little cryptocurrency token and basically effectively risk share the investment into that and share the profits. And if it loses money, you don't get your money back. But effectively, you have the guts of something that could fundamentally transform Islamic finance. And I agree. One of the biggest challenges, not just in Islamic finance, but in conventional finance, is that bankers are generally, by and large, quite lazy. Innovation typically doesn't come from the mainstream. It comes from the margin, and then the mainstream guys come in and then they use a distribution network to make huge profits from it. So I think fintech will drive that. But having said that, you do need the mainstream guys, conventional finance, to keep the economy growing. So I see room for both, where you have your quasi-interest Islamic compliant products still plowing ahead for the sukuks because the world needs to still continue. But the margin, hopefully going into the mainstream, you get this innovation at the grassroots level where people can experiment. And the biggest challenge, if there are any policymakers here, is the ability to allow these fintechs to play, to innovate, and ultimately for most of them to fail.
Yeah.
So thank you very much for your views and for your answers, panel. So I hope that you've learned a lot. So we've come to the end of the session. So if you have any other questions, please feel free to approach any of us after this session. So thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.